The stock market took a nosedive today. This follows the implementation of new tariffs by the Trump administration. These tariffs target goods from Canada, Mexico, and China. Investors are clearly worried. At 12:01 a.m. today, new tariffs came into effect. These tariffs are significant. They impose a 25% tax on many imports from Canada and Mexico. Canadian energy exports now face a 10% tariff. Tariffs on Chinese goods have also increased. These now stand at 20%, up from 10%. The Dow Jones Industrial Average plummeted by almost 800 points. This represents a drop of 1.8%. The S&P 500 mirrored this decline with a 1.8% fall. The tech-heavy Nasdaq also took a hit, dropping by 1.6%. This market reaction was dramatic. The impact wasn't limited to the United States. Asian markets also felt the tremors. Japan's Nikkei index tumbled by over 2%. Hong Kong's Hang Seng index wasn't spared either, falling by 1.5%. These drops follow weeks of speculation and uncertainty in the markets. Trump's tariffs have ignited a trade war. Canada and China are retaliating with tariffs of their own. Mexico is also expected to respond with countermeasures. This escalation has heightened global trade tensions. Canada acted swiftly. They immediately slapped a 25% tariff on over $20 billion worth of U.S. imports. This is just the first phase of their response. Canada plans to target an additional $86 billion worth of U.S. products with tariffs in the coming weeks. China's retaliation focuses on U.S. agriculture. They announced tariffs ranging from 10% to 15% on key American agricultural exports. These include chicken, pork, soybeans, and beef. These tariffs are set to take effect next week. Mexico's response is still pending. Mexican President Claudia Sheinbaum condemned the tariffs. She called them unjustified. Mexico plans to announce its retaliatory measures soon. The Trump administration argues that these tariffs are necessary. They cite several reasons for their decision. These include combating fentanyl trafficking, encouraging domestic manufacturing, and protecting American jobs. Trump claims these tariffs will punish Canada and Mexico for the flow of fentanyl into the U.S. He argues that these countries are not doing enough to stop the drug trafficking. He believes the tariffs will force them to take action. Another justification is job creation. Trump wants to incentivize businesses to move their production back to the United States. He argues that the tariffs will make it more expensive to manufacture goods overseas. Trump's stance reflects a protectionist approach to trade. He aims to shield American industries and workers from foreign competition. He believes this will strengthen the U.S. economy in the long run. The economic consequences of these tariffs are far-reaching. Experts predict a ripple effect across various sectors. Consumers can expect higher prices. Manufacturers will face increased costs. The overall market stability is also in question. One immediate impact will be on consumer prices. The tariffs will increase the cost of imported goods. Retailers will likely pass these costs on to consumers. This could lead to inflation and a decrease in consumer spending. Manufacturers will also feel the pinch. Many industries rely on imported raw materials and components. The tariffs will make these inputs more expensive, increasing production costs and potentially hurting profits. Perhaps the most significant concern is the uncertainty surrounding these tariffs. Their long-term impact on the global economy remains unclear. This uncertainty can make investors nervous, leading to further market volatility.